Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
LME 3-month nickel. I have said repeatedly in this commentary for months and months that the most significant feature of this market has been, and still is, even now, the very significant lows of 2021 at 15,665, which led to lows of late November 23, plus the lows in 24, most recently in late October, November, and early December, and I suppose also the congestion in January, February this year. It is this point that I feel obliged once again to mention the big descending scallop pattern I've been going on about for months and months and what it may mean within the near-term universe. So the key level had been and is the lows at 15,840 on this. A significant move below this, and by that I mean you would know it when you see it. A significant break below this could give a downside potential for the descending scallop pattern down in the 13,830 zone. It still all comes down to what the market has done, whether it finished fondling that key 15,840 zone. Over the middle of March, it looked like, well, it might well have done. But, last week's retreat back down below the gold long moving average, currently at 16,255, and the maintenance below the gold long moving average, began again to suggest the top side has been held down, if at a higher level than before. What looked like stabilization over the gold long moving average does not look so today. In amongst the other moving averages between 1606 to down to 15,735, we have the dark blue neckline, currently at 15,930 of the late July to late November 2024 head and shoulders top. I asked last week, and I quote, will prices pull back down to this level, as well as the now broken dark bright red middle tine, the bright red mid-December 24 to early March 24 downtrend nearby, which is currently also at 15,930. I'm not sure, but it does begin to look as if the market's contemplating such a move. If it does, then it puts at risk the topside targets. End of quote. 2 weeks ago, I laid out targets for the small mid-December 24 to late February 25 action being a possible double bottom, even an even Adam type, though admittedly not a very pretty one. We have a primary target X up in the 16,825 area, very close to where the market peaked 2 weeks ago at the 16,780 level, as well as the harder to achieve secondary target X1 up in the 17,170 area. As I said last week, these topside targets are now at risk, and they remain so this week. LME 3-month zinc. Much like LME aluminium, there are a number of patterns here that have affected this market in recent times, all happening at the same time. The first is the broken and breached, but still refusing to die, old dark blue upper tine, which is where the market has been based on this week, which is currently at 29.41. The May to August 2023 bullish shift pitchfork that subsequently acted as an August 23 to April 24 bull channel. This one will not die, just keeps going. Then there is the purple lower tine, currently at 29.01 of the somewhat newer February to August 2024 bullish shift pitchfork. Prices have been pressing below this lower tine for weeks now, but for some reason the market will still not fully let go of it. And today, this week even, it is some small distance below. I continue to say watch this carefully, as at least for the next few weeks. Then an even more recent pattern, an early January to early March this year reverse head and shoulders pattern, possibly a reverse head and shoulders bottom, with prices now breaking up over the bright red neckline below the market. And that's currently at 28.97. As recently as last week, the market had not fully shown whether this was a reverse head and shoulders bottom or a reverse head and shoulders continuation pattern. However, last week I favoured the reverse head and shoulders bottom idea, and I laid out a primary target X overhead at 30.92 and a secondary hard to reach target X1 up at 31.68. Even now this pattern is not fully confirmed, not just yet, but it seems to be very close to being so, so please continue to look to the topside targets for this pattern and just keep a wary eye open in case it becomes a false break higher. In the meantime, whilst all these big picture and some not so big picture patterns try and sort themselves out, we have below the market the flatlining gold long moving average, currently at 29.19, and slicing through the middle of last week's action, now possibly acting as support, the mauve medium moving average, currently at 29.10. Overhead we have a small congestion zone between 29.58 to 29.67, containing the interesting big old 50% Fibonacci line of the 2008-2022 move at 29.67. This week this has managed to act as a cap, but seemingly only on a closing basis. We have next resistances at 29.95 and 30.16 before we hit target X1 topside. Target X topside. As you can see, there is a lot of stuff fairly close to the market, and I even started wondering 2 weeks ago if I should look at the whole dark blue middle time below up to the big old 50% Fibonacci line overhead as a super large congestion zone. I'm still pondering on this idea. LME 3-month tin. As in some of the other metals I've discussed, there are a number of patterns here affecting this market. But here in LME 3-month tin, we seem to have had some resolutions to these patterns. The first is the bright red neckline, currently at 33.145, of the uneven August to November 2024 head and shoulders top. This bright red neckline had back in Q3 2024 been closely aligned with the long moving average, currently down at 31.355. But in November last year, they parted ways, and the long moving average had most recently acted as support, especially 4 weeks ago, in turning prices higher. The next is the long moving average itself, which had capped prices in early February and conversely 4 and 3 weeks ago acted as a support in halting the decline then. In late February, the market formed a pipe bottom, and bullish results of which we have seen since the start of March. Okay, so there is one further major pattern I wish to discuss. It is made up from the green upper trend line between November last year and March this year, plus the bright green lower trend line over the same period, together making a November 24 to February 25 ascending triangle. That could very well be seen as an ascending wedge pattern for the same move. Additionally, the bright green lower trend line was back then very associated with the dark blue lower time, currently at 31.106, of the large November 23 to November 24 bullish shift pitchfork. Enough that you might consider either of these, the bright green or the dark blue, as the lower trend line. 7 weeks ago, I detailed the basic constructions of this pattern, and then 6 weeks ago, with the move up over the green upper trend line, especially the long moving average, I placed a primary target topside in what was then the 33.150 area, and a secondary, harder to reach target up in the 34.500 area. 5 weeks ago, prices reached the primary target, and 2 weeks ago, in a fantastic bullish opening long white Mariposa, prices managed to reach and exceed the secondary target. On the way up, the market pushed up through the April 2011 and earlier all-time high at 33.605, as well as the 50% Fibonacci of the March to October 2022 move at 34.175 that helped cap prices as recently as late September to early October last year. I even added 2 weeks ago, and I quote, "There would be a certain symmetry to a move higher. We could even look at the early February to date action as part of a potential bullish halfway hesitation. But let's not get ahead of ourselves. There's still a lot of work needed on the upside to further justify such thoughts." End of quote. Well, all that lot of work, well, that got taken care of 2 weeks ago, with prices peaking between the 38.2% Fibonacci line of the March 20 to March 22 move at 36.365 and the June 22 high at 37.505, before pulling back down from 2 Fridays ago until even today. Now, 2 weeks ago, I drew a pink early February to early March bullish Andrews pitchfork to capture the bullish angle of attack. Prices are still utilizing this acute bullish pink Andrews pitchfork, despite a breach on the top side 2 weeks ago that's since been repaired. 2 weeks ago, I thought about finessing this pattern to a shallower bullish shift pitchfork should the circumstances demand it. Well, they certainly have chosen not to demand it. The exact opposite. as we sit today in between the 50% Fibonacci line below the March to October 22 move at 34,175 and the July 24 high overhead at 36,065.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.